Now, this is an interesting turn of events. Nobody talked about DeFi in the last months. Everything was about meme coin trading and AI. And suddenly we see Aave, the largest borrowing and lending platform, going up. Now the question is, how much higher can we go here? What's behind all of this? Is this price manipulation or is there some fundamental reason? Let's have a look at the data most people are not considering. Now, if you've never used crypto directly, if you've never interacted with the blockchain, if all you did was using centralized exchanges, you might have never heard of Aave. But the platform is absolutely massive. It's got a market cap of 4 billion and it went up by 85% in the last month. And within the decentralized finance ecosystem, there isn't actually that much more upside. There is also Chainlink, that's a data provider for the blockchain. It's got a market cap of 10.6 billion. But really what's driving the price in Aave is not how much it could climb, relatively speaking. It's actually the usage of the protocol, which is very, very bullish. One more metric to get the context here. This is the Ethereum chain, and all the tokens on the chain are ordered by their liquidity pool size. And what's at number one? It is the Aave token with 222 million worth of liquidity. There's more liquidity for Aave than there is for wrapped Ethereum or wrapped Bitcoin. And there is a very good reason for this. Aave is one of the few platforms that have been around for a long time, yet they're still growing from one height to the next in terms of the capital that's on the platform. Have a look at this. What we're seeing here is the capital that's locked up in all blockchains over a quite long time frame. So the chart starts in 2018. We had our DeFi summer in 2021 and subsequently the crash with the Terra Luna and FTX collapse. Since October of 2023, things tend to go up again, but we are not yet at all-time highs. But that is for all of DeFi across all blockchains. Aave is different. Here's the same chart for Aave. We are hitting new all-time highs, and a lot of the decline that we saw over here was actually not Aave getting used less. It was simply crypto prices in general going down. Because when we look at the total value locked of Aave measured in ETH, there isn't that much volatility. We just see continued growth. In the last year, the total value locked on the platform measured in ETH almost 3x'd. And that's pretty much in line of how much the price itself went up. Now let's take a step back. What is Aave in the first place? Aave is a borrowing and lending platform. So we can supply collateral to the platform. So wrapped Bitcoin, wrapped Ethereum, USDC, USDT, things like this. We can deposit this and then we can get some yield for this. Now, how do we get the yield? It's via the people that borrow the assets. So you have to pay interest when you borrow something, and part of that interest goes, of course, to the person that provided the liquidity. Now, why would you ever borrow something? Why would you borrow Chainlink token or the Maker token or things like this? Why would you ever borrow a token? It is to execute various strategies within crypto. So we can, for example, bet on falling prices, as in we can borrow the token, take a loan denominated in the token, and if the token then underperforms the rest of crypto, we can pay back that loan with cheaper money. Another strategy is interest rate arbitrage. So we can potentially borrow a token to then afterwards use this for higher yield opportunities, maybe for staking, maybe for using this in perpetual futures, etc. So sometimes we want to have the asset available for strategies, but we don't want to be exposed to the price. And since crypto becomes more and more complex and there are more and more such strategies, the usage of Aave tends to go up quite quickly over time. Now here's the user activity in the last year. So the number of users also roughly doubled from 1,000 per day to 2,000 per day. And it's not just flash loans, it's not just artificial, it's real deposits, it's real borrowing activity. We can also see how that growth happens pretty much across all chains. The share of new users on Ethereum tends to grow a bit faster and it takes away market share from Base, but overall, since the platform is available on many different chains, we see adoption across the entire ecosystem. Now, returns and decentralized finance does not come without risk, right? There's always the risk of getting hacked. There's also the risk of a potential liquidation where the collateral is not worth enough anymore to pay back the loan through that liquidation. Because of that, there is the safety module. The safety module is quite healthy. It's got 600 million of staked value deposited. Now you can probably already hear from the tone of this video that I'm quite bullish on Aave, but then we have to also explain something. Why did this here happen? So this is the Aave price relative to Ethereum over time. Aave initially did not outperform Ethereum. Rather the contrary, it underperformed by 92%. And since June of last year, that momentum has turned around. But where did the initial underperformance come from? Parts of it is, of course, the DeFi winter, right? Nobody wanted to invest in DeFi anymore because of Terra Luna imploding. But another reason is also tokenomics. So as with any altcoin, the supply tends to grow over time. In this case, the tokens go to the Aave ecosystem reserve, and the supply went from 13 million to now 15 million over the span of a bit under 5 years. Not terrible inflation, but still higher than what Bitcoin has. Now, relatively speaking, the inflation will be less severe because this is a linear schedule and we're now starting off a larger base. So they're going from 15 million to 15.4 million in the matter of 1 year. So that's not too bad. It's 2.7% inflation. But let's have a look at what's happening on chain. We already know that there's so much liquidity on the Ethereum chain, but let's have a look at the holders. So we've got almost 187,000 holders on the Ethereum chain. That's quite a lot. And so let's check out what happened with those holders in the last month, where the price went up by 85%. The answer is over here. On the left side, we see the number of holders that have at least 4 Aave tokens. So that's $1,000 worth of the token. That didn't really change much. The same is true for the number of medium-sized holders. So that's $10,000 worth of the token. And the number of whales slightly went up. That's now $100,000 worth of the token. So it seems like the largest holders tended to buy the most. Let's go up by another 10x. So that's now a minimum holding of $1 million worth of Aave. That also went up from 265 wallets to 271. So there are 6 new Aave millionaires. The number of new users versus returning users doesn't really change that much. So really, we can see most of the trends when we zoom out. Have a look at this. This is the number of small retail investors versus medium-sized retail investors versus large investors. All of those investor groups tend to accumulate over time, with the most consistent accumulation among the large holders. Let's go even higher in the wallet size. So on the left side, we've got our Aave millionaires. So that's $1 million worth of Aave at the current price. So 4,000 tokens. If we go another 10x, 10 million worth of Aave, the accumulation isn't that consistent anymore. In other words, the number of such wallets is not necessarily growing that much, but probably a lot of those wallets are also just centralized exchanges, not necessarily individuals. And the same, of course, then is true for the right chart. $100 million worth of Aave. Some of this is just treasury funds and locked up tokens, etc. But really what matters most is that pretty much all of the wallet cohorts continue to buy into Aave. And that accumulation happens faster than the token inflation. Again, the token inflation is only 2.7% per annum. The number of wallets that hold at least $100,000 worth of the token went from a bit under 1,000 to 1,100. So that's growth of 10%. Now, I don't dare to predict what happens with Aave tomorrow or the next week, but I do believe that long term, if nothing catastrophic happens, if the platform doesn't get hacked, there's some kind of exploit happening, then probably this price will continue to do better than Bitcoin and Ethereum. Simply because it's the market leader and simply because most people don't want to provide a lot of collateral on more risky platforms. It's a winner takes most market. Now, to a degree, the crypto market is just a reflection of unregulated life. As in, most gains come just to a few people, to a few assets. The vast majority tends to lose. So if you're just taking a broadly diversified portfolio of assets, we're likely going to not perform that well. Because here's the thing, crypto does not have any regulation. Everybody can launch a coin, and so there's no real barrier to entrance. And because of that, we tend to see a lot of fraud. We tend to see a lot of setups where tokenomics are rather poor, so where the average investor tends to not make money. And so when crypto cannot create money out of thin air, when it's actually a sophisticated system of moving money from the not so well informed to the better informed, then how can we become better informed over time? Because surely there's also a luck component involved, but there are some people that tend to win long term. Now, it's obviously not easy to become part of the minority. If we are not launching a project and we know more than the rest about that project, then how can we still become insiders? I think the best answer is to try to figure out what the insiders are doing and then simply copy trade them. For example, over here, we've got the Martini guy, and he bought the Chippy token when the market cap was still at $455,000. Now have a look at the comments on that wallet signal. The Martini guy tweeted about Chippy 2 hours after he has bought himself. And so since we are in a market without much regulation, and since we are in a market that does not produce any wealth, it's just transfer from one to another, it's all about figuring out an unfair advantage. And the unfair advantage of Martini guy is to simply have a following, right? He's just buying and then he tweets about it, and then the price goes up by more than 50% in just a few hours. Here's, by the way, his YouTube channel. He's got 150,000 subscribers. And so when we know what the insiders are doing, when we know what the influencers are doing, we can replicate those trades. Now the art is in finding the right wallets. And we are tracking 12 wallets of Martini guy. In total, we are tracking more than 500 wallets. So 12 are by Martini guy, but we've got a lot of other influencers as well. For example, check out this signal over here. This is YouTuber Jesse Eckel. He bought $10,000 worth of the winner token on the 2nd of May. And surprise, surprise, on the 6th of May, he published a video about the winner token. And so, of course, the price also appreciates in the top by almost 50%. And so really, it's a game of attention. It's not a game of fundamental analysis. Most YouTubers, they simply just buy the asset and then they promote it on their channel. And then later on, they might sell it at a higher price. Don't get distracted by all the noise. We are also following Alex Becker, for example. So we've got 12 of his wallets. We are tracking Crypto Banter. We've got 33 of their wallets. And here we've got Brian Young, who, by the way, bought the virtual token extremely early. And we've got 5 of his wallets. So how do we get all of that data? How do we know what influencer holds what kind of wallet? And how can we then create those signals that we can actually buy and sell with them? The answer is through on-chain analytics. So there are several approaches. We can, for example, look at what kind of NFTs does somebody hold. We can then see, are there maybe potentially deposit addresses on centralized exchanges? Did other major deposits happen to the same kind of wallet? Are those wallets potentially connected? We can also look at prior purchase histories. So let's say we've got an influencer that talked about very small altcoins in their Twitter or in their YouTube. And then we look at wallets that held all of those altcoins and that potentially bought them also before the tweet or before the YouTube video. Then we've probably also got the right wallet. We can then afterwards confirm this, right? We can look at what is the wallet buying next. Is there again another tweet or another YouTube video on this? If the answer is yes, it's probably the right thing. We're then continuing to track it. And so I've made an entire video playlist on how to find different wallets and how to track them, how to then get the signals and how to interpret the signals. And so our entire community is trying to find new wallets, discussing this in the wallet research channel. And then once we found an agreement, we add this to our influencer trade tracking channel. And so the idea is pretty straightforward. We're trying to generate as much outperformance as possible that in the end, the membership more than pays for itself. Now there is some funds needed, right? We can't just trade with a few $100. I think the best portfolio has at least $5,000. Once you are at 5,000, you should be able to make that money back. Now, if your portfolio is larger, then you can consider to potentially sign up for yearly as well. First of all, there's a discount involved. So there's $250 off. But secondly, there's also a 1-hour free Zoom call. So in case you've got a larger portfolio in crypto, but also outside of crypto with other asset classes, and you could benefit from a direct one-on-one call, the yearly membership might be for you. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.